Okay, what if I told you that the investment rulebook you've been using for the past, say, decade, you can pretty much throw it out? That's really the core message from JP Morgan's 2026 investment outlook. We are at a huge turning point, facing a fundamental shift in how the world actually works, and it's all being driven by these massive colliding forces.
The report calls this a new frontier, and honestly, that's the perfect way to put it. The old maps, the rules we've all relied on for so long, they're being completely redrawn. We're all kind of like pioneers now, trying to figure out a landscape that's been totally transformed in just a few years. And this slide, this really gets to the heart of it. It's the central conflict of this new frontier. On one hand, you've got the unbelievable promise of AI, a force that could just unlock insane levels of productivity and growth. But on the other hand, we're facing these huge headwinds from a world that's fracturing and inflation that just won't go away. It's this tug-of-war between tech optimism and economic pressure that really defines the whole challenge.
So how in the world do we make sense of all this? Well, here's our game plan. First, we'll define what this new frontier actually is. Then, we're going to dive into the promise of the AI revolution. After that, we'll tackle the pressures, fragmentation and inflation. And finally, we'll piece together a new playbook to help navigate what's coming.
So let's jump right in with part one, a new frontier for investors. That era of easy, seamless globalization and super low predictable inflation, yeah, that's fading fast. And in its place, we've got three new, powerful forces that are shaping every single investment decision: artificial intelligence, global fragmentation, and structural inflation.
And all of that brings us to what is maybe the single most important question for any investor right now. How do you build a portfolio that can actually thrive when you've got AI's explosive potential on one side and the pressures of a broken world and stubborn inflation on the other? That's the puzzle we're trying to solve here.
Okay, moving on to part two, the AI revolution's promise. This is, without a doubt, the most exciting part of this new frontier. But the key thing to remember, and the report makes this really clear, is that we should see this as a deep, structural shift in our economy, not just another tech bubble.
And the amount of money pouring into this space is just staggering. I mean, look at this. We're talking about big U.S. tech companies projected to spend over $500 billion a year by 2026. That's a threefold jump in just 3 years. This isn't just hype. It's a massive wave of cash building the foundation for this new era.
So with that much money and excitement flying around, you have to ask the question, right? Are we just blowing up another tech bubble that's going to pop in our faces?
Well, the report argues that this time feels a little different. Unlike the dot-com bust, the AI infrastructure being built today is in crazy high demand. Data center vacancies are at a record low, and most of the new ones are already leased out before they're even finished. And here's the kicker. This is driving real revenue. Stock prices are going up because of actual earnings, not just speculative hype.
So, yeah, the risks are there, and things are getting a little frothy for sure. But the verdict from JP Morgan is that this feels different. It feels like we're watching the messy, chaotic, but very real beginnings of a massive economic shift. All right, now we have to pivot. We've talked about the promise of tech, but now let's get into the pressures of our changing world. In part three, we're going to explore this world of fragmentation, where all the old rules of global cooperation are kind of breaking down. And this visual shows the shift perfectly. For the last 30 years, the whole game was about efficiency, making things as cheap as possible no matter where you had to go to do it. Now, the priority has totally flipped. It's all about resilience and security. The new question isn't how cheap is it, it's can I count on it being there? And look, this isn't just a theory. The numbers tell the story. Just look at the world's biggest trading relationship. China's share of US imports has been nearly chopped in half, falling from 22% down to just 12% today. This great decoupling is happening in real time. Fragmentation also means a return to what they call hard power. After decades of enjoying a peace dividend, Europe is rearming, and fast. You see countries racing to hit these new, higher defense spending targets for NATO. And that's creating a huge new investment theme around defense and security. Now for that third major force we talked about, inflation. In part four, we're going to look at why the inflation we're all feeling isn't just some temporary hangover from the pandemic. It's actually a long-term structural change, and it means we need a whole new way of protecting our purchasing power. And there's no way to sugarcoat this. It's a stark message, but it's a necessary one. The era of low, predictable inflation is over. We're now in a world where inflation is probably going to be higher and a lot more volatile. And that means protecting your money's value isn't something you can just set and forget anymore. It has to be an active, top priority. So what do you do about it? How do you protect your portfolio? Well, the report points to 3 key areas. First, commodities, which are a direct hedge against rising prices. Second, infrastructure, to support this new, resilient economy. And third, global real estate, which has built-in inflation protection through things like rent adjustments. Okay, let's bring it all home now. In our final section, we're going to navigate this new playbook. We'll combine the promise of AI with the pressures of fragmentation and inflation and try to build a clear strategy out of it.
So here it is, the new playbook in a nutshell. First, get positioned for the AI revolution, but manage your risk. Second, think fragmentation, not globalization. Prioritize resilience. Third, actively prepare for that structural shift in inflation to protect your wealth. And fourth, look into private markets, because that's where so many of the next big innovators are being born.
The path forward is becoming clear, but you absolutely need a new map to navigate it. We're in a new frontier, and that just demands a totally new way of thinking and a completely new approach to investing.
And all of this really just brings us to the final and most important question. In a world that's being pulled between incredible technological promise and huge geopolitical pressure, what's your next move?